Did you hit Nexus? That's the thing. You got to figure it out. Did you have a requirement? Did you trip Nexus? And then work from there. The good thing about it is we don't have to define economic nexus for ourselves, right? Each state does it individually for that state. So they have clear legislation around how you hit economic nexus in each state and what those thresholds are. So right now, there are about 6 different ways that you can trigger economic nexus in a state. A couple of examples are when you hit a dollar amount threshold, $100,000, $250,000, $500,000, depending on the state. And then other states have dollar amount thresholds and transaction thresholds. So you could hit $100,000 and 200 transactions, or $100,000 or 200 transactions. And that's kind of how you gauge whether you have a liability in those areas or a responsibility to collect tax in those states. I could tell you a story about how it evolved, right? I can remember, because I used to work for a Department of Revenue, and I can remember back in about 2015, I was in a meeting, and the meeting was, how do we get this Amazon money, right? And Amazon was kind of like the name that they used to talk about all these people that were selling on these websites, right? The basically SaaS companies, because they didn't have a way to tax it, because the only thing that they had available and in the law books at the time was a requirement for physical nexus, right? Which means that you have like a brick and mortar store in that state, or you have inventory in a warehouse, or you have an employee that works in that state where you've triggered physical nexus. And people selling on these websites didn't trigger physical nexus, right? So they didn't have a requirement to collect tax. And the states were behind technology at the time. So the states started to scramble and say, how do we get this money, right? We can tax this, but how do we do it? And look, I'm going to tell you the version of the story that I remember. It might not be the exact version, but I believe South Dakota tried to implement economic nexus in 2016, right? And they said, you now have this requirement. And the people that were selling on this website said, absolutely not. There's no legislation that backs up this requirement, right? And then these court cases started to happen. And that conversation that ended up, starting out, how do we get this Amazon money, ended up being South Dakota versus Wayfair, right? And then they decide, oh, well, they got the Wayfair money. And then all these other states fell in line based on that court decision, adopting economic nexus, which means even if you don't have a physical presence in the state, based on these new laws that we've enacted, you do now have this requirement to collect and remit tax to the state. And in that Supreme Court decision, or in that decision, they wrote in this threshold language, right, which was $100,000 and 200 transactions. And then other states just kind of adopted it. And then even though they were not required to follow that language, they could actually adopt whatever thresholds they wanted. And I think that's what we're seeing now evolve, right? That we have these different requirements in different states. So now, they had this requirement based on the sales that they were selling in the country anywhere, that if they hit these thresholds, they had to go and register, right, for sales tax, collect the sales tax, and then remit it to the state. So it was a whole new set of laws that a company would have to know. Laws, regulations, tax rates, right, thresholds that they had to know in every state. And again, every state kind of adopted it differently. There's some, like right now, I think there are about 17 that follow the same rules, and then everybody else falls in those other categories. And you kind of have to know it as a seller now where am I tripping Nexus, right? And, when have I hit this requirement to have to collect and remit? In the Wayfair decision, they wrote in these thresholds to make sure there wasn't an undue burden placed on the people that were now required to remit it. I assume that they thought that if they set this threshold at $100,000 and 200 transactions, that substantiated that that company had a big enough footprint in that state to require them to have to remit this tax and make sure that it wasn't an undue burden to that taxpayer that was collecting and remitting. However, I believe that we're seeing these states repeal the 200 transactions because there were a large amount of sales, but low dollar sales, right? So they were hitting the 200 transaction mark, but say I sell 500 individual toothbrushes into a state, right? And I sell them for $2 a piece, right? And the tax rate's 6%. Let's just do math. Then I owe you 4 cents on every toothbrush I sell. So at the end of the year, what do I owe you? Like $20? Well, as a person who's collected that tax, I would I would spend more money getting you this $20, right? I might pay a preparer $100 to file and submit the return, right? Well, then I'm $80 in the hole trying to get you this $20. So I think that the states have realized that there's been this undue burden to these people that have high transactions and low price sales, right? And they started saying, okay, they really don't have a substantial footprint in this state, let's just go with the dollar amount, which is $100,000. Well, we're seeing it in Alaska right now. For a lot of people that are filing there, they took away the 200 transaction threshold, and now they just have the $100,000 threshold. And we're finding that people no longer need to be registered or to collect or remit in that state. So it takes away that burden of having to file the returns. And it's those people that, again, are the high transactions, low price sales that really don't have that big of a footprint. And the other side of it too, right? The state side of it is, if you're getting 10,000 returns filed, I'm making this number up, 10,000 returns filed, and they're only remitting $5 in tax, well, how many people do you have to employ at the state to process these $5 returns? And how cost effective is that for the state as well? When these transaction thresholds are taken away, you have to recalibrate your system, right? And then you have to aggregate your sales in a different way across all those channels to ensure that you understand whether you've hit that Nexus threshold or not. And it's basically like a compliance cost to doing business. I mean, it's what did you do or not do? Let's say they triggered economic nexus in a state and they didn't collect, right? They're still responsible for the tax on those sales. So they have to pay out of pocket, right? And they're subject to the penalty and interest for that period of time that they should have collected and remitted, right? If they did collect, right, and then didn't register, then, registration penalties, late file penalties, late payment penalties, penalty and interest. And then, depending on how long you went, there are, criminal things that can happen as well. But you don't technically see that as much. But it's a lot of fines. It's better to know where you are, right? And what your responsibility is to these states for tax obligations. Pretty hefty. I've seen in my lifetime hundreds of millions of dollars in, unremitted tax and fines. That was in the state I worked in. So it just depends, right? The larger the business, the larger the liability is for not being compliant, right? If I remember correctly, there was a case in Illinois in like 2019 where it was settled that the company would pay $330 million in liability. And that was a settlement. The triggers are changing, okay? So I've noticed recently, and I mean in the past few months, some of the states are sending out notices that say, it's kind of like a warning shot notice, that say, hey, we've noticed something weird. Are you sure that you registered for sales tax on the appropriate Nexus date? And I'm looking at them thinking, what triggered this, right? And what I'm seeing is there is a discrepancy between when they registered their business and when they signed up for sales tax, right? And they're saying, hey, we're giving you a shot to go and correct this thing. It might all be true, right? You could have set up a business and registered a business and not really done anything or sold anything for years and then started doing it. But they're kind of giving people a shot and saying, we're looking at this and something's not adding up. And I'm seeing it for SaaS businesses, for these businesses that had a requirement post Wayfair, right? And they're saying, we really hope that you got it right. And we want to give you one last chance, because I still know people in the business on that side of the business. And this is where auditors are concentrating on these SaaS companies that, were in the business of collecting and remitting and may not have gotten it right. Did you hit Nexus? That's the thing. You got to figure it out. Did you have a requirement? Did you trip Nexus? And then work from there. There's so much that can be done to become compliant, but it depends on things that you do once you realize you should have been, right? So if you realize that you have years of responsibility, but you've never registered, then you have the ability to go through the VDA, the voluntary disclosure, right? Which makes your look back periods less. You kind of just say, hey, I messed this thing up. I owe you money. I want to give you money, right? And let's just, write a check and call it even. But, right, if you had a requirement and you already registered, then you have to go a different route and you have to file those returns and you have to pay the penalty and interest. And my suggestion in either of those cases is to talk to somebody that knows what your options are, right? Talk to somebody who's done it before, find a provider or somebody to help you through that so you don't do something that cost you from being able to do something that would have been more beneficial for your company. Good providers are tracking it for you, letting you know, having the option to go and register for you and get you compliant, right? And then all they technically would say, here's your registration, here's your ID number, file this away in case you need it, but we're going to handle everything else for you, right? And the other thing is, when you're tracking Nexus, your provider can do these other things for you. Sometimes you make a sale and it's not added into the Nexus because, non-taxable sales aren't added into it. And they can do all those things for you. If they know the laws and they have it all built in, if you don't know those things and you say, oh my God, all my sales are go towards Nexus, you could be collecting and remitting way before you need to. Do your homework, right? Here's what I say about it. Do your homework. And what I would be looking for is, what do they have on this team? And specifically, what sales tax background do they have on this team, right? Because if it's just a software that was built, right, your software is not just like, it's only as good as the tax information that's fed into it, right? And if you don't know the laws, the legislation, the rates, what good is it? They're probably not providing the best service. Yeah, I would definitely say, what's their tax team like?